very good day to everyone. We are Thrive Lending Sendiri Berhad. I'm Dewey and I will be doing the introduction and customer segments.
Hi, I'm Sonia and I'll be covering value proposition.
Hi, I'm Megan and I'll be doing channels and customer relationships.
Hi, I'm Evan and I'll be presenting key resources.
Hi, I'm Xiaotong. I'll be presenting key activities and partnerships.
Hi, my name is Kawi and I'll be presenting Thrive's financial forecast and break-even analysis.
With that, let us start introducing our FinTech startup idea today with the help of the business model canvas. Presenting Thrive Lendings. Ever had that problem where you need an awkward amount of money, too small to loan from a bank but too big to borrow from your friends and family? Or you're on the other side of the spectrum where you are an investor but looking to diversify your portfolio into something riskier. Thrive Lending Sendiri Berhad is a peer-to-peer lending platform for personal loans, where we will play an augmentative role in the space of personal lending, acting as a middleman and connecting investors to borrowers. We noticed that the current solution for these problems still does not pose a true solution. For example, getting a personal loan from banks is a long and tedious process, or in some cases, only cash payment is accepted. Or in an extreme case, some people might even borrow money from loan sharks. For investors, they can only invest into different types of assets, but there will always be liquidity problems, or it's low risk and low return. We at Thrive, with our own credit scoring model, will be able to provide the accessibility and convenience to our borrowers, while also providing protection to our investors. Although we are aware that the P2P lending for personal loans is currently not regulated in Malaysia, we are confident in getting the license to operate, riding on the growth of the P2P lending scene in Malaysia and the value we are able to create with our company. Let us first look at our customer segments. As we are a peer-to-peer platform, both the borrowers and investors are considered as our customers, and Thrive will be in the middle, facilitating the lending and borrowing process. Through our research, the main demographic of borrowers will be the mass public due to age not being a factor in making financial decisions, whereas the main demographic for investors will be older age investors, as they are more willing to take higher financial risks. As we have discussed, applying for a personal loan from banks is a long and tedious process. Therefore, the borrowers that we are creating value for will be those that are in need of small amounts of loans or for people that are facing problems in getting loans. On the investor side, we will be creating value for investors that are seeking higher return in exchange for higher risk. We are also able to cater to both risk-loving and risk-averse investors, with us being able to provide superior flexibility on investment amount and repayment period. That's all for my part. I will now pass the floor to Sonia.
Thank you, Dewey. Now, many times people face the problem of borrowing money in cash. There are solutions to this, whereby you can take out a personal loan, though the process is pretty lengthy. You can also turn towards the buy now, pay later systems, though there are expenditure restraints. There's also the option of going to loan sharks, though your life may end up in danger. Investors also face the problem of being unable to find high risk and high return investments for a short term. Normally, investments out there are normally for a longer period of time. So, Thrive addresses both of these problems by providing an online application that is accessible and convenient. Accessible meaning borrowers can borrow money through a quick process without any expenditure restraints. All they have to do is fill up a quick questionnaire to allow us to better determine their credit score. Investors can also easily add their money into our application, and as Thrive is open to the public, investors will be compensated with a higher return due to its risk. And as our repayment period is relatively short, the investment will be for a shorter period. Now, how does Thrive address our customers' needs? Thrive addresses our customers' needs by connecting investors to borrowers in a seamless method, as it is a quick and easy process. Thrive also addresses the needs of our customers by allowing our borrowers to spend as they wish, as there are no restrictions. As for our investors, Thrive also allows them to diversify their portfolio. Thus, Thrive offers an accessible and convenient service to both our investors and borrowers. I will now pass it on to Megan.
All right, thank you, Sonia. So as Thrive will be new to the market, it is important that we are able to communicate our value propositions to our customers. So first, we will need to create awareness for Thrive. To do this, we plan to carry out a combination of both online and offline advertising through social media such as Facebook and in-person promotions. With this combination, we greatly believe that we will be able to reach a wide demographic of customers. So once we have created awareness, we will also need to ensure the continuous improvement of Thrive to suit our customers' needs. For this, we'll make available a review section on our website and also carry out surveys during the in-person advertising session. So you may be wondering right now, how will customers use Thrive in the first place? Well, in regards to that, our services will be available on the Thrive platform, where customers are able to complete their transactions, whether it be borrowing or investing, through a quick and easy process, which I'll get into more detail in the next slide. So finally, for after sales, we will ensure the continuous support and engagement with our customers through customer support, which I'll also get into more detail shortly. So as mentioned before, Thrive follows a quick and easy process. As shown in the visual here, customers who seek to apply for a loan using the Thrive platform will need to follow 3 simple procedures. So first, customers will need to select the amount they would like to borrow. Next, they'll be brought to the confirmation page in the middle to confirm the details of their loan. And then once confirmed, the amount will be deposited into their bank account. So similarly to the borrowing procedure, investing on the Thrive platform also follows 3 simple procedures. Investors will also need to first select the amount they would like to invest. Then they'll be brought to the page in the middle to confirm and check the details of the investment. And then once confirmed, the investment amount will be deducted from the account accordingly. Now moving on to customer relationships. As our customers involve anyone who is seeking accessible funds or a new investment opportunity, we understand that our customer segment is broad from young adults to older individuals, and not everyone has the same level of tech savviness. So therefore, we aim to make Thrive as inclusive as possible by establishing a personal assistance relationship. To fulfill this relationship, we will have customer support built into the Thrive app itself for easy access. This includes an automated chatbot service and a customer hotline where customers can speak to a Thrive representative in regards to any issues or inquiries they may have. With this, customers will have an effortless time using Thrive and will more likely be referring Thrive to others as well. Furthermore, to boost customer retention, we will also have a tier-based loyalty program whereby customers who have a good credit history with Thrive will be able to move to higher tiers. So as seen in this table here, our tiers span from beginner, silver, gold, and platinum, with more benefits respectively, such as lower interest rates, higher repayment period, and higher borrowing limit. That's all for me, and now I'd like to pass on to Evan.
Thank you, Megan. Now I'll be moving on to the key resources needed in our company, Thrive. Key resources are the main inputs that your company uses to create its value proposition, develop customer relationships, and generate their revenue streams. So the key resources are able to be split into 4 categories. These 4 categories will include physical, financial, intellectual, and human. The first resource will be physical. Physical resources that Thrive will need is office supplies and office space. Office supplies will include like laptops and softwares needed for the employees to do their task. Office space will be a place for employees to develop our services. The next resource will be financial resource. Thrive will need a high capital to fund their day-to-day operation when the business is still self-sustaining. Thrive's capital are comprised between a combination of equity investment and debt financing. These funding of capitals will be used to purchase new assets for the company and to invest in future projects to generate a greater value. In addition, with enough capital, our business operation will run much smoother and more efficient. Intellectual resource is another resource part of key resources. Thrive will need 2 softwares in order for the business to run. The first software will be to develop a smartphone app, which is a platform for our users to learn money from. This app is mainly focused on the user-friendly and simplicity side. The next software will be the credit scoring system. This system will be based on how Thrive rates their consumers and will not follow the traditional scoring system. In addition, with our customer personal information, Thrive is in need of a platform to store and analyze the data. Furthermore, this system just helps justify what type of borrowers Thrive has and would separate the good and bad borrowers from the company. The last resource will be human resource. Human resource will be the labor force or manpower in the company. Thrive will need a medium to high level of labor force in order to run their daily operations smoothly. This includes accountants, marketing experts, software engineers, IT experts, solicitors, human resources, and office workers. All of these workers will play a specific and significant role in Thrive. That's all for my part. Now I'll pass the time to Xiao Tong to explain the slides.
Thank you, Evan, and I'll continue on the key activities. The key activities required to deliver our value proposition will be to build an app in order to facilitate all the investment and borrowings transaction. And we also need to acquire a legal team to help us negotiate with the regulators in order for Thrive to be regulated. Moving on to the distribution channels, conducting advertisement will be its main activities, and it will be done through Google and Facebook ads. Infographic and demo video will be utilized in these activities. As for the customer relationship, the main activity will be to generate a loyalty program to retain customers, and we plan to do that through tier system that reward timely payments. As for the revenue stream, it will be important to set a suitable pricing, and we will need to determine interest charged on borrowers, percentage gained by investors, loan origination fees, and also the late payment fees. Moving on to the key partnership, there are several partners that Thrive will be having, and we attempt to achieve a win-win situation. The first one will be the investment bank doing loan packaging and securitization, which allows investors to invest based on their willingness to take risks. Also, it helps to diversify the default risk of borrowers across different pools. Investment banks doing this will earn fees for their service. Next will be the investment bank to manage trust account, where borrowers and investor fund will be managed separately. It helps Thrive to comply with the regulation and also instill consumer confidence, while benefiting the banks with fees earned through their service provided. Our next partner will be the external legal counsel. The partnership between Thrive in-house team and the external legal counsel will help to speed up the negotiation with regulators and also the regulatory process. They as third party can also better ensure that Thrive always keep track with the future regulations. The legal counsel will be benefited with fees earned also. Our next partner will be the e-wallet operators. It will help Thrive to provide flexibility to its borrowers as they can now choose to have their fund deposited into the e-wallet account instead of bank account as the only choice. E-wallet operators will then gain an increased flow of funds and spending in their ecosystem. Lastly, it will be the credit reporting agencies. Partnering with them helps Thrive to gain cheaper access to consumer credit data, which will be used for risk assessment and credit scoring. In return for the cheaper access, Thrive will provide its partner access to its loan default data. That's all for my part. I'll pass it to Kawei.
Thank you, Xiaotong. In my section, I will cover Thrive's financial projections to determine whether its business proposal is financially viable. Referring to Euromonitor's forecast of Malaysia's total consumer credit balance, the P2P personal loans industry is projected to command 1 to 5% of this total balance. Of this total addressable market, Thrive is expected to dominate with its first mover advantage and reach a market share of 50% by 2024, before tapering back down due to the expected entrance of new competitors. With these assumptions, we can derive the projected loan transaction value flowing to Thrive's platform. As a platform operator and intermediary between borrowers and investors, Thrive does not demand a cut of the interest earned by investors. Instead, Thrive's business model relies on two main revenue streams, a 3% loan origination fee and a 5% late payment fee. While the loan origination fee is applied to all loans on Thrive's platform, the late payment fee is only applied to late borrowers. Based on these assumptions, it can be observed that Thrive's annual revenue is expected to start at 2 million ringgit in year 1 and reach 16 million ringgit by year 5. Moving on, to build and scale its digital platform, salary expenses are expected to be the largest component of Thrive's cost structure. With a total headcount of 48 employees, Thrive's salary expenses are expected to constitute over half of its total expenses. Furthermore, to successfully reach and serve its target audience, marketing costs are expected to be Thrive's second largest expense, contributing 26% to its total expenses. Meanwhile, to overcome the industry's steep regulatory hurdles and defend against potential litigation, Thrive will spare no legal expense. Besides employing an in-house legal team, Thrive will also seek external legal counsel to fast-track the regulation of the P2P personal loans industry. This is expected to cost Thrive an additional 30,000 ringgit per month. Lastly, it is also important to note that all investment banking fees and related transaction costs will be paid by the investors as a cut from their interest income. Moving on to Thrive's startup cost, the largest component is expected to be the purchase of computer hardware and software. With an employee count of 48 and each computer system costing approximately 5,000 ringgit, the total cost of procurement is expected to be 240,000 ringgit. Meanwhile, the total startup cost, excluding working capital, is expected to be 591,000 ringgit. To forecast the estimated time required to break even and recover Thrive's initial startup costs, the payback period method was used. Based on Thrive's projected revenue, cost structure, and startup costs, the company is expected to break even within 2 years and 9 months. After modeling Thrive's financial projections, it can be concluded that Thrive's business proposal is financially viable. This concludes our presentation from Team Thrive. We truly hope you've enjoyed the last 15 minutes, and we thank you so much for your time. And remember, with us, anyone can try.